Why do some people sit in front of multiple screens buying and selling stocks all day while others simply buy a stock and hold it for years? Which of these strategies do you think builds real wealth? Day trading or long-term investing? Well, today we're going to uncover the truth in really simple words so you can decide which path might work for you. So let's continue with the rest of the video. Day trading is all about speed. Traders buy and sell stocks, crypto, and other assets within the same day, hoping to profit from small price changes. Some people prefer holding the stock for a couple of hours, while others only hold it for a few minutes. The idea is really simple. Buy low, sell higher, and repeat as many times as possible. Imagine buying a $50 stock in the morning and then selling it for $53 in the evening. That $3 profit per share feels great in the moment. Imagine doing it repeatedly. Feels like a shortcut to get rich, right? But the only catch is that it requires constant attention, quick decisions, and nerves of steel, really. So we can say that day trading may feel exciting, almost like a video game with real money on the line, but it can also be really risky. Long-term investing takes a very different approach. Instead of focusing on short-term improvements, investors tend to buy assets with the intention of holding them for years or even decades. Because their main goal isn't about quick profits, it's about building wealth over time. Let's take Apple as an example. If you invested $1,000 in Apple stocks back in 2010 and held onto it until today, you wouldn't just have small gains. You would have tens of thousands of dollars. That's the real magic of compounding. Long-term investors don't really stress over daily ups and downs because they know that over time, good companies and strong markets tend to grow in value. The appeal of day trading is pretty obvious. The idea of making hundreds or even thousands of dollars in a single day almost feels irresistible. It's fast, it's thrilling, and gives you a sense of being in complete control of your money. But here's the reality check. Most day traders often lose their money. Studies show that a very small percentage of people actually make consistent profits. The rest often burn out, overwhelmed by losses, stress, and constant pressure to perform. Long-term investing, on the other hand, may not seem very exciting, but boring often wins. When you let your investments sit and grow, you give your money the chance to compound. Compounding means your gains generate more gains over time. It's like planting a tree. At first, you don't see much, but with patience, the tree grows and produces more fruit year after year. High losses. One wrong trade can wipe out weeks or even months of profits. Day trading moves fast, and if you're not careful, losses can pile up quickly. Many beginners underestimate how fast the market can turn against them. Emotional pressure. Day trading is a roller coaster of emotions. Fear, greed, and panic often push traders to make impulsive decisions. Over time, this constant stress can drain your mental energy and cloud your judgment. Costs and fees. Since day traders buy and sell frequently, transaction costs and taxes add up quickly. Even small fees can eat into profits, making it harder to stay ahead. In the long run, these hidden costs make trading less profitable than it looks on the surface. Market crashes. Stock markets don't always go up. Crashes and corrections can temporarily slash the value of your portfolio. Seeing your investments drop can feel scary, but recovery usually happens over time. Patience required. Long-term investing takes years, sometimes decades to show big results. Many people get frustrated waiting for growth and end up selling too early. Success here comes only to those who can stay patient and trust the process. Liquidity issues. If you need money quickly, your investments might not help. Selling at the wrong time, especially during a downturn, could mean locking in losses. That's why it's important to only invest money you won't need right away. So, which strategy is better? Well, to answer this question, it somehow depends on the type of person you are. If you love risk, thrive under pressure, and can handle losing money, day trading might give you a rush. But if you're like most people who want steady income and a peace of mind, long-term investing might be the perfect option for you. The truth is, for the vast majority of people, long-term investing wins. It's not flashy, but it works. Some people mix the two. They keep most of their money invested long-term, but also set aside a small portion for day trading. This way, they protect their wealth while also enjoying the excitement of day trading. I keep saying this in all of my videos that the key here is discipline. Never risk the money you cannot afford to lose. At the end of the day trading is like sprinting while long-term investing is like running a marathon. One is fast, stressful, and risky. The other is slow, steady, but reliable. If your goal is financial freedom, retirement security, and peace of mind, long-term investing is the proven winner. But whichever path you choose, the most important thing is to start. Money sitting in a bank account loses value to inflation. Money invested wisely has a chance to grow. Are you a fast-paced trader chasing daily wins? Or the patient investor watching your money grow over decades? Let me know in the comments down below, and also subscribe to my channel for daily financial insights.